Good morning.
Hello, mate.
How are you? Welcome back.
Pretty good.
Thank you. Alrighty. So let's see. So yesterday was actually when we look at it now, pretty pretty grim session. So apologies to having to leave early. Had to Maddie man having a meltdown yesterday. So I got to the nursery. So she had a good day there, and then she came home, and then we decided we'd try to put her to bed early. So took a while, but let's hope that extra sleep regulates her a bit better.
Hi, Hayden.
Hey, mate. How are you?
Not too bad, not too bad. Did you do a Learn to Trade webinar before?
Yeah. It's my usual Thursday.
Oh, yeah, that's what I thought. I must have, maybe because you can only book in for so many at a time. I think they might have run out and I didn't redo it or something. So it's all
Seriously?
right. I can do it on
No,
catch up
I think
or whatever.
you can book into. I thought you could book into unlimited.
Yeah, well, I had a look at it about because I didn't get the email. I
Oh,
had a look
but
at it about.
it's because it's the first one of the month. You probably need to rejoin them all for
Oh,
July.
okay. Yeah,
You
maybe
would have
something
had
like that.
you would
Oh
have had
well.
June's ones, and you can't book on a
Was
day, can you?
was there a bit you went over or how'd you go?
Oh yeah, it's just the usual, just a refresh of I didn't do it was more just like stochastic, just talking about confluence. Make sure you like if we ascertain that we're in an uptrend or downtrend, don't just buy over like if you're in an uptrend,
Don't
don't
buy
buy.
overbought.
Yeah, it's the buy over
I think
bought.
I think I've done enough of that.
Yeah, buy over bought, but also like buy over bought at a point of interest, not just overbought. Just because the stock is overbought, don't buy just because of that, but buy overbought if it's also at a fair value gap, support resistance, demand area. Maybe if you want to use
Yeah,
an indicator like a Fibonacci level or a not you know what I mean, like a Bolly band boundary if you're into that, or EMAs if you're into that.
yeah,
Just
yeah.
having some confluence of why. So I just reinforced that and saying like I still like Euro buys.
Oh, what happened to the pound? You're like pound bloody.
Yeah, man. They had
Well,
some.
pardon my French, but it shit the bed last night.
Yeah.
That's no other way to put it.
Yeah, they so Keir Starmer, so part of their budget was to try return the UK to a surplus. So
Yeah,
basically, they were going to cut a whole bunch of like benefits out of the welfare and disability payments, and
yeah, right.
there was a lot of controversy because the whole thing was they weren't going to raise taxes on the people. They promised that we won't raise taxes on people, and to deliver this surplus. And what they did was they delivered tax increases to businesses, who then passed it on to the people. So indirectly, it's still it's always the middle class that gets smashed with these things. There was big controversy
Yeah,
anyway, but then it's just another example. Like there's no like all these governments are so similar, but basically the controversy was that there was a rebel faction of the government that just did not want this to go through, and they just put up such a resistance that the government caved, and now they're returning those benefits back to the disability side of things. So now,
right.
so now that surplus is gone. So
Oh, that's
if
right.
if
Okay.
yeah, if
Yeah,
anything, it's going to be if anything, it's not going to be a deficit. It's just going to be break even. But people think that they cave on one thing, they're going to cave on another. So then, after following that, apparently Rachel Reeves delivered like a pretty tearful press conference or something, and now people are like, "What the hell's wrong with this woman?" So now they're thinking that is she even going to survive this, because they've just had to do a backflip, they lost credibility. the gilt started rising again because no one wanted them. The government's going to be in huge hundreds of billions of debt. It's just, you know, the whole thing that happened. What, I can't remember how long ago was it? Was it 9 months ago when pound really shit itself? So something like that was going on again. So it's a lot of.
So is that just a short-term reaction to that, or is that now going to jeopardize the potential strength of the pound for the week? Because there's some good sort of, I mean, it stopped out my bloody pound JPY swing trade, which was fine. But it looks like it's on the H4 anyway. It's not too badly set up for a buy, but if it's going to, you know, adversely affect the pound, then we're going to see a lot of weakness in it. It's better just to leave it alone. You got any thoughts?
It dropped a long way, but it's still at a good level. But
that's what I mean. Yeah, it sort of looks all right.
One thing I was concerned about, though, on the COT reports, is whilst I thought that pound could hold its strength, we did start seeing, like in the last week, we did see like a pretty significant reduction in the number of long positions. Like, and this is now, it's like one week's not enough to make a difference, but now we've got 2 weeks. We went from 111 to 106 to 100. So the net positioning and the short position is actually increased. So net, we've actually gone from, on the futures markets, being 4.4 rounded billion long to 2.9 billion long. So there's a pretty significant reduction here. And then if we go to the overview and we try to find where the, like when you do it with all of them, you see euro was taking off, yen was falling, but we've actually seen pound the last 2 weeks have a bit of a dip. So, like, is it just a short-term correction and they've just had a bit of news to exacerbate that now? Or is this something, the beginning of something a bit more like profit-taking on pound?
Could be.
Could be, yeah. And then if we look at currency strength as well, we try to pair that with how things have been going. Pound has taken a bit of a dip over here. I was looking at this before. So
the Aussie's doing all right today out of nowhere, and the miners are through the roof as well. And I don't know what the catalyst for that is.
Yeah, I don't know, man. Probably just maybe a pump before the dump. But Aussie's
China
had some news down here. Yeah, China had some news. The Cation thing index. Where is it? Cation services PMI. Oh, those poor numbers.
Yeah.
But
yeah, that's right. It was good the other day, and it didn't do anything. And today, that news came out. It was poor numbers, but the China 50's been up, the Aussie's been up, and the miners have been up. And I can't find the catalyst for that.
No, it wouldn't be that. But it's probably there was when they do the half yearly review. So the half year review of the tech stocks actually showed that Chinese stocks are actually outperforming the world. So Tencent, there's another one called Hyson. I think it's Hyson. They make memory chips that are used in a lot of this generative AI, and these guys are actually outperforming. I mean, Nvidia and Microsoft are still clear winners. Hyson is, I think that's from Korea. Yes, so Hynix, sorry. In China, Tencent, Alibaba, and one called, I actually don't know what this company is, but it's XIAOM. OMI. I mean, how do you even say that? Does anyone not know Chinese sort of like? I have no idea the pronunciation.
How do you spell it? I can't say it's on the phone, but
XIAOMI.
Yeah.
Hayden, it's Xiaomi.
Xiaomi, is it?
Yeah.
Yeah, that's right.
Okay. So
I don't speak the language, but I know it's Xiaomi.
Okay.
It's meow me.
Meow me.
Hi everyone.
Hey Danny. Xiaomi. So these guys year to date from like Chinese stocks, like they're definitely not a capitalist country. So you got to know that these things are still like pretty subdued when you compare them to like US stocks. But this one is up a lot. It's up a lot year to date. It's up a lot. And in 2024, from down here to here, it grew like 122%. And then from year to date, it was up at like a good chunk, like 60 odd percent, 70% maybe up here as well, year to date. So it's showing that when you look at the world and you've got return on equity, there's a different way of looking at stocks. Instead, like return on equity is dominated by US ones, but when you actually look at who's keeping up with specific stocks year to date, so indexes, the US ones are killing it because they've got many more companies that are into the AI space. When you look at the Chinese stocks, they're actually second, and they're actually outperforming the US if you have to include Apple and Tesla, because Apple has been a huge drag on the US performance if people don't individually pick stocks. So where's Apple? Yeah, if you individually pick stocks, then so if you don't individually pick stocks, you just pick the index, like tech-based index, then US has actually been dragged down by Apple. But if you remove Apple out of it and you remove Tesla out of it, then obviously US is like by head and shoulders above everyone else. But when you look at if you're just more of a passive investor, as in not passive, but like I don't want to individually pick stocks, but I want to pick sectors and potentially like overweight emerging markets, then China's about 8 times outperforming US by about 8 times, based because of these other stocks like Tencent, Alibaba, Xiaomi. Anyway,
Meow me. Do you think Trump sounds like he's standing firm on his? He put a post out. Did you see it the other day or yesterday? On the deadline for the tariffs. You see that?
Yeah, to put more pressure on countries to negotiate. He'll say that, of course. He would never, ever, ever say that he's going to give a deadline before the deadline, because otherwise, countries, where's the fire to get a deal? So of course he's going to talk like this to put pressure on them. He announced the deal with Vietnam, and I thought it was like an actual threat, but apparently it's a agreed to deal, which is 20% tariff on Vietnam and a 40% tariff on trans shipping. Like if something goes from Vietnam to Korea to the US, it's like 40%.
He's off his rocker. I mean, you can't. This tariff idea is just crazy. Well, they've got to agree to it. They don't have a choice. Yeah.
Anyway, let's get to German 40. What was I going to say? Oh, sorry, there's one more thing. Oh, that's right. Yesterday, today's NFP. I'm really, really interested to see what the number is, because yesterday was the first time that we actually got a negative ADP in about over 2 years, 2 and a bit years. It's the first time we got a negative number. So is the Fed rate cut odds jumped up considerably from 1 in 5 to 1 in 4 chances that they're going to cut at the end of this month. Whether that comes in, we'll see. But that was a lot of people now going to be talking about this one. So I'm really interested. We know this one's not the one that matters, though. The one that matters is today. Whether it's right or wrong how they get this data, I'm not trying to argue that. Everyone's got their own opinion on it, but if you have to, which one has more market impact, ADP non-farm or BLS non-farm, it's certainly this one. So we need to be aware of that, because as traders, it doesn't matter what I think. If I think that it's bullshit, but it comes in and it has a market impact, even if I think it's bullshit, it means I still could lose money. So I want to make sure that I'm aware of what the market considers high impact, and this is it. This is the one we need to be aware of. This non-farm at 130. So I won't have. I'll be completely flat. Doesn't matter what I do here in this scalping session. I won't have anything, even on German, open at this time. I just don't want. I just want to deal with slippage or anything like that. So we're seeing. So we've seen this. So this week so far. So we saw Monday, after such a rally that we had last week, we had a lot of people sat in profits from Monday, Tuesday, Wednesday was a bit of a breather, Thursday, then Friday. A lot of people that sat in profits. That London were very scared to commit to any buys with price way up here. So price promptly fell, and the narrative that I had as well was that US investors that were using US capital to overweight European indices or European equities, because that was the play for a lot of this year, is that not only do they, even if German 40 and NASDAQ were equal, like let's just say German 40 and NASDAQ were equal in growth, if your US dollar is devaluing as much as it has, and you're a US investor, you'd be better off in a European equity. You know what I mean by that? Is because you don't only just profit from the growth from the index, but you also will be benefiting from the appreciation of the euro versus the US. So I was thinking that, look, on the Dixie, we had that long-term level down here, that triple wick formation on the monthly chart, which lined up with, like, this is the triple wick area. Well, there's 4 wicks really. But this area makes sense. And why specifically this number? That came from the yearly chart. So if I go to the 12-month chart, it was just, because I like the necklines, it was taking the neckline for 2018, 19, 20, 21. So I like that neckline, which lined up with a demand area on the monthly chart. And then first time touch, we know we get a good reaction. And I was thinking, well, if the US is able to actually get some positive data, then by the time that price got down here, and now everyone's thinking, oh, dollar's dying, and it's all in the media now, how this is the worst half of the year in over 50 years, it's going to attract a lot of new traders to that, thinking that the dollar's going to keep on going down. And maybe it does keep on going down, but when you've had something that's gone down for so long, you've got to think that there's a whole bunch of people that are sitting in massive profits that will just be dying for new traders to come in and want to sell at a much lower price so that they can actually profit take. So that's where I was thinking, if we got some good data, I expected the bounce from here anyway, but if we did get a bit of a bounce, price touched it and then promptly just rallied about nearly 1% from that level. If you're a US investor in European stocks, not only could Trump introduce tariffs on Europe, which would drop the European stock market, but also if you get some good data coming out of the US, which actually makes the US appreciate against the euro, then that could be a double-edged sword for US investors. So I thought it'd be highly likely that with the way that German was last week, for such a big bullish candle, I anticipated that we would get some sort of like correction. Now, I wasn't sure how much it would correct. The first level I was looking at was purely the play that we took on Monday, which was to at least just come down to this first level. And then we saw Tuesday was coming down, and there was more chatter about that level got hit in the Dixie. We got good job numbers on Tuesday as well, which then people were thinking, were a bit optimistic, thinking, oh man, this is the second month in a row, or third month in a row second month in a row where we actually beat expectations, and it's the highest number in the last like 6 months. So I think people were a bit more optimistic about the US at that stage. So that's why I was leading into those sell ideas from Tuesday, and then even yesterday, when price had come down, we got Asia session, Asia low, Asia high, and then I don't really treat this as a when I see this kind of reaction where it's kind of like a wick reaction. I'm not really using this as a support. I don't particularly see that as a support. I see this V shape more as a reaction to something to the left. So what I was looking at on the left was structure, right? So this is where on the 3-hour chart, 4-hour chart on it, this is where you've got like, I'll show on the hour chart. Hour's very clean. Sorry guys, I'm having a brain fart there. 2-hour, the 2-hour. You can see it's very clean that we've got price pushed up, neckline, price came down, neckline, price pushed up, and then away she went. So I like this area as a demand zone. I see this as a reaction to this demand zone. And then I thought, if we hold this bias, it's very likely we can push deeper. And I think it was Simon that was pointing out that this blue line, if we go to, like, say, the 30-minute chart, and we go to the left over here, you can see that this is where price consolidated in the lower time frame at the base of this demand zone before then pushing up and away. So we've got a little fair value gap as well that actually catches my eye just now. Shame it didn't catch my eye yesterday. But there's a little fair value gap just here. I'll just change the color. Make it green. Okay. And then I was expecting price to drop out from this area, and price came down on the lower time frames. I thought it was going to just do a fairly easy reaction, just go down, break the lows, and keep on going. So I took a first loss, realized I made an execution error where I oversold on the 1 minute. So I got out of it for a pretty small loss. I realized my mistake and just got out of it. Then price pushed up and then came back down again. So I thought, oh, this is the time. So I've gone in for another sell. And then Maddie was just killing me with her crying. So I just left. I had to go take care of her. Took a loss on that second one. Price pushed up, and then I was like, well, I'm going to give this the third chance, because the play that we had for the last 2 days was the candle that sort of broke down, the impulsive candle that pushed down, and then the top of this candle is what I considered going to be the supply area. So when price pushed back up to here again, just before New York session, I'm like, I'm holding strong on my conviction that we're going to push down. Price reacted off of this level, pushed down, and then I jumped into the sells about here for the third time. If I took a loss the third time, man, I was going to be pissed. But my initial target was the blue line. But as price came down, as it was breaking these levels, I did take, I took a lot of profit off the table. But then the runner unfortunately got stopped out. But it was still ended up being up, because of the risk reward, because of these trades. Even 3 trades, 2 losses, 1 win, there's still enough to bag like about a bit over 0.25%. So I made up for those losses plus some. So I was still, it was a good day, but when I look back at it now as well, that I don't know why price ranged for so long, but it was I hope you guys didn't get caught up inside of that. I think you guys I think when Tom put the Zoom link in afterwards, you guys got a decent little move from these highs down, I think. Is that right? You actually got a little nice little sell from up higher. But price just consolidated, man. What a bastard of a London session. But then it was very nice, the reaction down. And then why it recovered was because of that ADP news. When it came out, very poor numbers. Now it's all about, again, is the US going to cut rates, etc. So we'll see now. I'm sure that the news cycle could shift. That I'm expecting pullback longs. That's what I'm thinking for today. But there'll be bad numbers. But I'm sure that there's going to be people coming out now and saying, "Oh, but the numbers aren't so bad. It's more just small and mid cap businesses that are laying off workers, and they're being replaced with AI, and they're going to be much more efficient, etc. So it's bad for the economy because people are losing jobs, but it's good for the stock market and businesses because they're running at a more efficiently. And then they're going to say, but when you look at it as well, large mega cap actually still putting on jobs, not Microsoft, but other big mega caps. So the stock market's safe, and AI is the boom. So they'll probably pick holes in this, which will then lead to a bit more US optimism. So I'm expecting to see maybe we do get a little pullbacks, but I'm sure then the narrative will shift again, and it will just be probably about US rate cuts, and that will weaken the US dollar further. Euro will appreciate. European stocks will appreciate because of the AI boom and the correlation with the stock market, and it will just be a good place to continue investing in, most likely. And we can just continue pushing up higher, and this was just the pullback of that weekly candle. And you never know, after all that's done, maybe Trump comes in and starts talking about Euro tariffs again and dumps the market. So be prepared for anything. Anyway, so the trade I was looking at earlier was above 911. Between these two, between this line, and it was the London high from Tuesday. Oh, so yeah, way further. I'm going to get rid of this blue line. That one's, I'll put the blue line up here. So, because this is a pretty decent reaction above here. So hopefully this is where we do a buy to sell to buy. So this area, I think we get a decent little reaction. It's only about 20 pips away. And then we've got lovely clean candles above that. So if we can, hopefully we'll see what London does here. London's open now. So Asia and Euro and New York are all in profits. So I can't see London just buying freely. I think London has some manipulation, because you really got to think that London are opening at this price, and we've got New York rallied into the highs. Asia continued that momentum. Euro added fresh optimism into it. To me, this very much looks like a day we had last week, which was this day, which was Friday last week, where we had New York rally into the highs, Asia continued it going, and then Euro added that fresh impulse. I'm expecting London to give a little bit of a fake out, probably at that 911 area, and then London to basically pull back, maybe halfway into Asia, take out the Euro open low, and then from there, if we get oversold conditions, I think London can make a run for it. So I'm looking for pullbacks. So Frankfurt open candle is, oh man, it's all the way down here. That's the Frankfurt open candle. So I'm not sure if we can get all the way down here. But that would be halfway through Asia as well. We're overbought on the stocky, so there's no buys for me just yet. But yeah, I think maybe buys from down here. Or I'd could be risky, man, but I'd even entertain a cowboy sell from here down. So it's a risky play, cowboy sells down, but I'd like to see if London can take buys from the pink line up all the way to basically 24,000. Let me know what you think. I'm very aware of the different narratives that are running around. And what makes it very confusing is how they spin it. So they can absolutely spin this either way, that poor jobs numbers means Fed cutting rates, boost for stocks, or they can spin it poor jobs numbers, Fed cutting because they panic, recession in the US, stocks don't like the R word. So there's as a trader, the market is like a bit of a politician sometimes. They speak out of both sides of their mouth. But I think from a supply demand point of view, I think London buying up here, knowing that if they commit too much capital to that, we could have a bit of a profit taking from people that are already sat in profits. Oh, you're in hospital, Sarah. Is it your back again? Oh my gosh. Ouch. Sorry to hear. Are you on the green pen? If you're on the green pen, get your hands off the trading terminal. The morphine? Yeah, man, get you.
They let me keep my green pen when I had the hernia issue. It's in my drawer here.
You go there for a quick toke every now and then.
No, I haven't touched it. But I kept it just in case. I'm like, oh, if this thing flares up again, at least I got something useful. Yeah.
It's like a cigarette to say, I don't know, what vapes. Just go there for a quick vape on the green pen.
It's been a bad trading day. I need something.
Just dull the pain. Dull the pain of this range. If I'm going to be in this range, I might as well be on the green pen.
Yeah. No, the morphine was they gave me plenty of that. I could see why people get addicted to it. Unfortunately, it definitely feels good.
I bet. I mean, when Sarah was when she was in labor, and she was like, I could just see her. She's like, give me the epidural, and this is like try to avoid morphine, but it had to be a forceps delivery eventually. And I look over and Sarah's kind of smiling after a while. I'm like, Jesus, I'm the one that's panicking. She's just thinking like, man, this is horrific. And she's like, no, I can't do nothing. Bit thirsty though. You got some water? Okay, so London's coming down. It's only 27 pips. That's very, very small volatility for the first 5 minutes. Hey, Michael, what do the stocks open up as? SAP looks mixed. Deutsche, so T-Mobile, Deutsche Telekom. Move. Oh yeah, man, look at this. Down she goes, man. Anyone that sells?
Oh, flat.
Flat. Yeah, stock is still oversold. Yeah, I get my words mixed up so much. Stock is still overbought. On a 3 minute, it might be oversold. Getting oversold. We are at this area is a bit of a support that pushed up meta high. But I would like to see London come down to here. Oh, there's a notification, Mike. UK government bonds rally after Starmer says Reeves will remain as Chancellor for a long time. It'll provide some support to the pound. pound's rallying now. You gone long now, Mike? The other Mike, the original Mike, the Michael. Okay, yeah. So you're long from Euro Open. So you're thinking, oh wait, you're not long yet. You're long. You're looking at long from Euro Open. Oh, you're already in. Okay, so you're winning already. Okay. All right. Oh, you mean you longed it from at the Open? So you've been in it for an hour and a bit. Yeah, gotcha. No, that's all right. That's all right. Yeah, I was just, I don't feel comfortable longing from here. We are creating like a little. We are accumulating here. So we did have a drop, and now we're basing on the 1 minute. Is it going to have another drop? Yeah, Sarah, I don't trust you. You're drugged up. Okay. Come on. Come down to this line. You know you want to do it. Just going to invert the scale quickly just to make sure I'm not missing something. Yeah, no, I'm going to be. Yeah, I'm really not interested in buying this area. I want to see what it does down here. So it's nearly at Asia high. There's a potential issue. But I want it 30 pips lower. Hmm. So far, though, that's a good reaction, and Stocky did get oversold, and we're definitely in an uptrend. That is demand. Yeah, it wasn't low enough for me to jump in, but did anyone jump in for buys there? Be careful if it comes back to your entry. I wouldn't hold it if it comes back to that entry. So if you did jump in and it's up 20 pips, I think you'd want to make it safe, or just be ready for a rejection. Yeah, I don't like it from here yet. I really would prefer it just to come back a bit lower.
I think they're just enticing buyers in. It will go down further.
Yeah, so I think just a little bit more of a shakeout, hey. I mean, if the buyers do come in, I don't think we need to worry about like if they do want to take a bullish and it's going to go like up to here, we don't need to stress about not getting the very low. I think if you got a good bullish move, I think you could easily piggyback off that without having to stress about trying to pick tops and bottoms. 841 for a long. Yeah, I mean this is the whole. As long as we get we don't have to hit that blue line down the bottom, but this whole area is demand. So even if it got down to there, I'd be fine with it. The top of this zone. It's got to break that little 1 minute support candle. That 3 minute support candle. Come on, drop, 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 drop. I've got a question for you as well, Jim, but I'll ask you as soon as this thing breaks. There we go. Good morning. Okay, it's getting close to the buy zone. So what have we got? We've got buy the dip, people. We got stress. So 1, 2, 3. See if we can get a couple more legs down. Take out the low. And then maybe then we can cowboy it. Not cowboy it, but you know, just put a low risk trade on, start a position to take it long.
Hey, any chance of spreading your chart out, make the candles a bit bigger? Way over on the left, we don't really need it, do we?
Like that?
That's better, thank you.
Yeah,
Great. Yeah, that's much better.
Yeah, it's because I had on the
I'm not sure what the other people think, but
no, that's right. I had it on the higher.
Sorry?
I had it on the higher time frame where I was looking at the zones. But no, it's absolutely we can. Got a bit of a fair value gap over here on the 1 minutes as well. So this area where price launched from, and this is the open. It's very close to here now. So it just needs to go a wee bit lower, another 10 pips, and it will take out German open. Then we're in get the 50% of Asia. So I'm going to prepare my long order. You went long, Tom. The first little reaction is nice from that area. Very nice, man. Hey Nish, how are you? So we're starting to get some divergence. No, sorry, we're not getting divergence yet. I would like us to start getting some divergence. All right, I'm gonna go long. Small position, guys. Small position to get started because it's not. I haven't got a confirmation yet, but I'm wondering if we do hit that level. I'm looking to target up here, but I'm going to scale out, of course, if we get up to some of these areas. Okay, but I'm in. This is where I wanted from this blue line, the Frankfurt Open.
I'm in with you.
Cool, man. So I'll first of all I'm trying to look at is whether we can get 1-to-1. And if we can get 1-to-1, so just be aware that this is we dropped, we based, and we dropped. So I don't particularly want to be risking my if we push up to here, it's about 1-to-1. And at that point, even if it gets close to there, I'll be securing something. Well, not securing, not necessarily securing something, but like reducing my risk anyway. I might take like 25% off, and then bring my stop right underneath that low to give it a bit of breathing room. And if we just continue pressing lower lows, I mean, I'd be fine just to get out of the trade as well, and then get back in a little bit lower. Actually, I'm probably going to do that. Actually, I'm gonna bring that up to break even. If it wicks me out, that's fine. I'll consider giving it more chances. But if it does wick down and break these lows, then I've got some other levels that I could potentially get back in, like 10 pips lower, to target those longs again. But if it does break this low again with a lower high, then probably better to wait for a bit more like a HCS or some sort of proper rejection. We oversold for a bit, probably divergence actually is what I'd aim for. But hopefully we can survive, and hopefully we just get a nice V shape back up to this area. Hopefully we can then take some profits. Don't do it, hold it, just hold. Come on. Come on. So we've got a little inside candle now on the 3 minute as well. So it's very likely we could see a candle that could take that low and then close quite strong. And if it did something like that, then I'd, if it stopped me out and it closed like that, I'll just get back in. Because it could easily sweep these double bottoms lows. This is just about just holding on. If you want less stress, just give yourself a fair bit of room, because the risk reward on this potential is very good. No, okay. It took me out. It's all right. It was set up. It was. I'm interested in this zone still, but it's still got that kind of bearish structure, like lower highs, lower lows. So a cowboy entry means a coward. If it's a cowboy entry, I'll manage like a coward. I'm still looking at this stuff. Let's just see. We've got a little bit of divergence potentially forming. See if this candle can actually confirm it. a sec, guys.
I had an accident here. Everything is we. Everything is as we here.
Okay. Hey guys, I'll be right back. I've got a nappy accident.
Everything is here. The lap is too full. And there's we on the baby as well. Yeah. I think with the way she was sitting, it just went up. I'm so scared of upsetting her. I don't even want to. I know. I need to take off the. But we need to wash it as well. This needs to be washed. I don't know if any of this has anything. Oh, as long as this is, put that there. As long as this is dry.
All right, I'm back. Yeah, it's all right.
You should have stayed in it.
No, that's all right. That's all right. I had something on it still. I had something on it still. Like I was concerned. I was concerned that would happen. I was like, oh shoot, stop me out, but am I going to just stay out? I just went in, had a bit of a wider stop.
Yeah, fair enough.
My TP got hit. Oh, you out already? Okay. Good reaction, wasn't it?
Right.
Right there.
Yeah.
40 pips. 40 pip reaction. Just kind of, it's funny like how you see that divergence formed. That's what I was pointing out. That 1 minute candle confirmed it. And then we've got, see it's bullish reversal at a point of interest. It's the same play as Tuesday. So I hope you guys can appreciate how they've got like a playbook that's very similar. See now if it can push up another 120 pips, it'd be amazing if it does. All right, who's in it? Who's in it? Who's safe? Who's waiting?
I got 2 in it.
Got 2 in
Oh,
it.
3 because I've got a higher time frame on as well. But 2 and 5s.
Cool. Nish, you're in. Anyone else?
No, I'm flat, but TP got hit.
You're already in and out. Yeah, cool. George took it. Awesome, man. That's awesome. Michael got 2 in it as well. Oh, very good. Tom, you're still in it. Very good, man. We're cleaning up here. So I had to leave to pick up my son. Oh, Bubba, son. Jim missed it. Yeah, the area made sense though. Hey, like it's the carbon copy of Tuesday basically. It's just a refresh you again. Tuesday last week. That's Tuesday this week. I'll go back quite a bit more. This one. Here. That we had New York buy, Asia continue that, Euro open, pushed up, and then you've got the Frankfurt low being up here, but it comes back into like this area of Asia. Well, it's more the Asia high in this case, but a little demand area inside of London, pre-London, and then just London scaredy cats didn't want to buy from the open, so they let price fall back a bit into a decent area before then they committed. And the same thing happened today. Now look at it. We got New York that after the news sold off. They clearly bought that news low, and then it was just it didn't close at the highs of the day, but they closed at the highs of the session, which meant that New York that bought the dip, bought the bad ADP news. They never took profit to close the day. Asia continued that momentum higher. Euro brought in fresh stimulus. London now with Euro, Asia, New York all in profit are thinking, we can't do this. If we buy from the open, we're going to get stomped on. So what they do is they let it pull back. Now price is pushed up here very nicely from this zone, and it's likely we get a bit of a pullback again because people will be jumping in late. And we've got where London started the sells, so we've got a fair value gap right over here that London's just tapped into. So we'll probably get a pullback some stage, and then hopefully we can just keep the rally going back above that rejection from, I think it was Tuesday this week, that rejection. And if we can close above the London high, then I've got no doubt with those clean candles to the left that we can pretty comfortably, probably pretty quickly as well, push up into there. Maybe get a reaction first time, because that will be latent liquidity above that London high. So we might get a pullback down, but ultimately, if we touch that area, then I'm assuming we're going to go up to here eventually. Just don't know how deep that pullback would be. But good session, guys. Good session, and it's nice. It's 8:30, so we didn't have to wait like the other day when we had to wait. Had to wait for like an hour a bit. This time was a quick one. Bit overbought on the stocky now. Yeah, man, just what a clean day. Very clean. Not rush into buys from the open, even with the bullish buyers. Let London do its thing. Remember, I said if we can get like 4 or 5 swings, then it created that divergence entry at the Euro lows, stopping them out, and then it's just done forward correction. Like, I mean, that's as clean as you can get it. Clean as you can get it. Just putting in.
Bit cleaner than nappy.
Yeah, I wish it was cleaner than the nappy. No, sorry. I wish it was.
As clean as that.
Yeah. She peed all over a doll. I don't know what happened. It's the first nappy of the day. So she just got up and because it's been hot, she's been drinking a lot of water. So it must have been like at its absorption limit. And then just when Sarah went to change, when she sat on the floor, the way she was sitting, she must have just like, just peed everywhere and then put a doll on it. Nah, I wasn't. What's number 3? Is it a combination? There was no poo. Thank you. Thankfully. Yeah.
Mommy's there.
Can I say? Do you guys understand the trade? That's the most important thing. You understand it.
Starting to pick up your method.
Yeah, I was pretty convinced on buys from the get-go. I was trying to actually wrap my head around where you're thinking sells, but that sort of makes a bit more sense now. So, but yeah, no, pretty sure, man. Yep.
The sells are only going to be if it went straight up from the open to that area.
Oh, I thought you meant shorting it from where it dipped down to that level that sort of did that little double bottom there on whatever time frame you're on.
Here.
No, from the top to the bottom, that move.
Oh,
that
yeah,
move there.
Yeah, there were sales available. If people want to go sales to buys, for sure. They were there. I don't like. It's not my preferred thing because I do find it very difficult to go from sells immediately into buys.
Yeah.
So that's not something that I'm totally comfortable with. But there were definitely sells down. Oh yeah, DAX is open tomorrow. It's only US is closed. We'll be here. It'll be low volume though, most likely. So from why this has happened? Do you understand? Like, I want you guys to understand the theory on this. On why did London have to pull back before it can go long?
Well, they want a better price though.
They want a better price, but it's not just that they want a better price. It's that it's very dangerous for them to buy from here because so many people are already in buys that if they sense London are going to buy, they can do a rug pull on them. Because if London bought and then they just remove all their liquidity and let price drop, you would have London. Yeah. So let's say, so London want a better price, of course. So London comes in and they see price here and they've got their trading desk and they want a better price, but people that are already in trades as well. They also want to sell high, but they also want a better price to buy low again. So for the purposes of liquidity and institutional volume, they know that after New York closes, London's the next big fish that comes in. And if London buy here and then other people think, great, we can actually just do a rug pull. They can pull their liquidity, pull their buys off the table. That can actually cause the market to drop. And then if London actually committed to buys up here and then now are in underwater, they could be forced sellers. And that could be where people that were in profit from that have the ability to close a good portion of their buys to do that rug pull. London being forced sellers could be a great time for them to be able to buy low again. So it's safer for London to actually just do nothing, and it's just you do have some orders, market on orders, positions that will get executed on the open. So there's volatility on the open, but what it does is it just, you get a bit of volatility, but London sort of just waits and lets the profit taking process go on. And then once you get, remember what we're saying is that you get after, you get the first pullback is the first pullback in the uptrend is met with good optimism. People buy that dip. Second one, people think, oh yeah, that's all right. It's a little bit lower, but it's a better price. Buy again. But then after the third and fourth, people start thinking, oh, I bought higher, been stopped out a bunch of times. Now I'm going to try sell. Or you've been thinking that this is now bearish structure. So any weak hands previously will just start to close those trades, thinking that I'm going to preserve profits. So that adds to the selling pressure even more. And then eventually, once they've shaken out a lot of the weak hands, prices they've achieved their goal that they're not buying high anymore; they're buying much lower. And now they've been under here means that anyone that actually bought in the Frankfurt Open in the opening hour of Frankfurt Open Exchange, they're now underwater themselves. So it's likely that Euro are going to be forced to sellers for London to pick up the crumbs. Well, not crumbs necessarily, but pick up the bags. And London then commits to the buys.
Yeah, makes sense.
Yeah. It really got to look at what the previous sessions have done. Which brings me to my next topic. So, Jim, do you have a moment? Do you have an ear I could borrow? Yeah, I'm expecting it to sort of break, but I'm expecting there could be a little pullback as well, just to fill this little gap. But Jim, if you're available, I just want to ask something, because I remember you had on one of the indies. I don't remember which one it was. Because this constantly just yeah, it's not this one. It's constantly just keeps on reverting to the default ones. Okay, come on, push sucker. Yeah, so pulling back to fill this little area. So this is the London high as well. But this is what I'm interested in. Yeah, I don't think he's at the computer, so I'll talk to him later. breakthrough. Look at this hour candle. Gosh. Just all the way down. Took the low. It's been dead for the last 10 minutes now.
Are you looking to get back in, Hayden?
Yeah. Yeah, down here. When I was saying, I had a wider stop though for the second time. So the first one pushed up, and I moved it to break even, and then we had the nappy thing. But it's like, if you want a low stress one, just enter and have a bit of a wider stop loss, because it's good
Hayden?
reward. Yeah, mate.
Could you change those green divergence lines to black? I was going to show Nat, please. I'll take a photo of it, please.
Green. Can I do that?
Sorry.
That's right. Is that what you mean?
Yeah, thank you.
Let me just expand that up. So that's, there you go. That's very, very, very clear now. So price, it draws it from the lowest point on the stochastic, but it really should be measuring that as well. So
I just want to show Nat, that was all.
Yeah, it makes lower lows, and the stochastic makes higher lows. So divergence at a point of interest. Stocky oversold, divergence at a point of interest to the left in an uptrend is a very good entry mechanism.
No, I understand. I just want to show Nat a picture paints 1,000 words.
Yeah, for sure.
Thank you.
Have you taken a screenshot?
No, I took a photo on the camera, on the telephone.
Yeah, cool.
Thank you.
You're welcome.
Okay.
You got any thoughts on the francs remaining strong as houses, Hayden?
Yeah, man. There's a lot of flow going into it, and they're not supplying the world with francs because they cut their interest rates to zero, so they're seeing slowdown. So it's just likely to continue. It's going to continue until they. It's likely Swiss will stay strong until they do a potential. Swiss are going to do an intervention where they will be forced to. Maybe they see like, I mean, to protect it, they could intervene and buy and then just do a purchase of overseas assets. Otherwise, for it to be more of a sustain, like that will just be a pretty explosive move. To have a bit more of a sustained weakness in the Swiss, you need to see good US data. So potentially, if I think what needs to happen for Swiss for their point of view is they need to get the Fed and Trump on the same side. So if Trump's going to have his policies and can convince Powell, or Powell sees weakness in the data that he's going to cut rates, the short term would be US dollar weakness, but that will also lead to a lot of underpriced assets. And then that could be when Swiss start accumulating again.
Yeah. Okay.
But at the moment,
Yeah.
Swiss wouldn't want to buy anything at the moment with everything being so overvalued and with the US economy on shaky grounds. With them cutting rates, they're definitely seeing world like deflationary forces. So if they're expecting to slow down, they're just not buying. If they're not buying, no Swiss are being available, so there's huge demand. That leads to I always get them mixed up whether it's a pull or a push demand, but it's demand either way. If Swiss aren't buying things, they're not offering because of their trade surplus. And I've explained this before, haven't I? Do I need to? Do you guys understand? Does anyone not understand?
Yeah. No, I get it.
Yeah. Is anyone that's not sure what I mean by why Swiss cutting rates with their trade surplus means Swiss strength? Let me know. I'm happy to explain it again while we're waiting for this to break out. Nish, you're not sure? Okay. So you've got the Swiss National Bank. Okay, Swiss National Bank. And you've got why the Swiss is a safe haven is because of their banking system. Okay. The banking system that because it's anonymous, people will push money into this banking system to protect gains as well. And then they've also got Swiss is a very well set up country that there's a huge demand to always be putting money into the Swiss system. So money is always flowing in from overseas. Okay, so Switzerland's trade surplus is very positive because money is constantly flowing into Swiss, not for goods and services necessarily, or it's for services really. It's not necessarily for goods. I mean, Swiss do make watches and chocolate and stuff like that. So they've got some exports, but money flows into Swiss mainly for the banking system. So if there's always money flowing into Switzerland, what for Switzerland to try make sure the trade balance is not too one-sided, is that they need to send Swiss out as well. But what they do is they buy overseas assets. They buy like just all assets, the U.S. treasuries, U.S. stocks, U.S. like Apple stock, etc., etc., etc. And that creates a steady flow of Swiss being made out to the world to combat all the money that's coming into Swiss. So when Switzerland they signal that interest rates, so they're aware of like some global slowdown, deflationary forces. What they do is they cut interest rates because what they're doing is they don't care about they're happy for their banking system to cop a little bit of a loss to protect their exports. But what that does is for them to signal that they see an economic slowdown. Part of them cutting rates also means they're also going to be hesitant to buy overseas assets. So as soon as they cut this connection where they're not buying things overseas, that means that there's a lot less Swiss that are available, but people are rushing to always put money into Swiss bank accounts and they need Swiss to facilitate that trade. So if there's no Swiss being available, what that does is it increases demand for Swiss, and that's why Swiss currency goes up. And you got to think that if the Swiss are signaling this, and investors are seeing that the Swiss are signaling this, even though the Swiss have before had negative interest rates, like 0.5%, for example, if you're an investor with huge capital invested, say in the US stock market, you will happily take minus 0.5% on your gain on your what's the word I'm looking for? You'd happily take 0.5% loss on your assets versus taking potential 5% correction in the stock market. So when you've got a lot of wealth, it's not about making gains, it's about protecting gains. So if they think that there's enough reason why US assets can come down, if you had to choose between losing 5% or losing 0.5%, you would take losing 0.5%. So the more that they're rumbling of a pullback or a correction, what that can lead is even more demand for Swiss. And if Swiss just are definitely not wanting to purchase overseas assets because they also sense a minus 5% correction or something, it just means Swiss just keeps on going, getting stronger and stronger and stronger. So that's why Swiss is a safe haven. So that's what I said, quite a few weeks back now, isn't it? I mean, I said exactly that when was it? When was it? Oh, was it just last week, was it? No, 2 weeks ago. When we were here, when I was saying that them cutting rates is actually bullish for Swiss. It's counterintuitive, but it's actually bullish. You guys remember that? I mean, it had to be under a rock if you don't remember, or not in these streams whatsoever. So I mentioned it in the Discord as well. So that's actually, it's just not the way, when you look at US cutting rates, or you look at pound cutting rates, or Aussie cutting rates, etc. If you cut rates, that's bearish for the economy. But because of the trade balance for Swiss, it's different. And because of the way that their economy set up, they cut rates is actually bullish for the currency when it gets to zero. As in, if they're cutting rates from if they're at 2% and they're cutting rates to like 1.75, then if they cut rates, it's bearish. But when they go into 0% or negative percents, that's telling them that they're really worried about the outlook of the world economy, and that could then trigger a safe haven flows, and Swiss is a safe haven currency. So, to answer Mike's question, when do I think Swiss will devalue? Is when the global outlook looks more rosy. And that would be if the US is heading to a recession or in a recession, they want the government and the Fed to be on the same side. So they need to be cutting rates with policies that are trying to increase exposure. And if Swiss then sense that, look, this is inflationary forces coming in, if they sense that this is going to be inflationary with cutting interest rates and also policies that support business growth, then you don't want to be in currency, do you? If you're in an inflationary environment, you want to be in assets. So that's when the money will just reverse the course. Swiss will then be using their trade balance, their positive trade balance. They'll be investing fully into assets that go up with inflation and getting out of holding like cash. Then it's a risk on environment.
Hayden, did you say you had a question for me?
Yeah, I did. So what I wanted to explore, I was talking to Bill about it yesterday afternoon, is I wanted to run some testing. We're going to do it through Python, but I also just wanted to visually, see if there's a dynamic here where, on your indicator, the Jim High time frame.
Oh yeah.
And how you can see these ones, like the 4 hour, 3 hour, and 1 hour, what they're looking like to the side here. I wanted to have a session as a candle. So have like Asia session, pre-London, London, New York. Do you reckon that's possible? Because I know it's going to be like Asia session and pre-London have different like the different number of hours in those candles, but would you be able to
Yeah.
do something like that?
Should be able to do something like that. It would have to be an overlay on the existing chart. So,
Yeah, that's right.
where you've got like the sessions at the moment with the green, blue, yellow, red.
Yeah.
What would be easier to do is actually just change those. So this green one, for example, the big New York session green one would actually look like an overlaid candle at the back on the background.
Yeah, it would look like this.
Yeah, exactly. And then all you need to do is turn off the candles on your actual chart, and then you'd be able to see it.
Yeah,
if that makes sense.
And it would just do it for like, so the this one would just be like, would look like this.
Yeah.
Yeah.
Yeah, exactly. And then if you go up to the top on the left where it's got German 40 Forex con, turn off the candle there. I think it's there. You can turn the candles off.
Yeah.
Then it would look a little bit tidier. Yeah, that sort of thing. So on a naked chart, it would look a lot better.
Because then London was like this.
Yeah.
And then Asia was like this.
Yeah. I think I did one with well, I did something similar to this.
Yeah, so what I wanted was because I wanted to explore like having New York session as the start of the day and thinking what New York does rather than always having the candles. Like, I don't want to look at the daily candle, but I wanted to like almost like make the daily candle represent but New York being the open rather than Asia being the open. And the idea is because the same idea here is that if New York is a candle that closes up near the highs or the lows if it's the opposite, but if it closes up near the highs, and then if London is opening higher than the close of New York, I'm pretty sure that London will have a bottom wick, or maybe London's bearish, but London will have a bottom wick. I'll be very surprised to see a candle like this. I mean, I know there has been times when it has, when there's like a fundamental reason just to be like fully long. But if New York are closed like this, Asia sort of pushes, Euro pushes, unless there's a pullback and London's like down here, London might just go long from the open. But if London opens higher than New York, and we've had New York open, Asia open, Euro open, it's very unlikely that London's going to go up from the open. It might go up, but that's just an inducement, because there should be a pullback for London to get a better price, or there'll be London going long, and these guys will be taking profits, doing a rug pull on London to then be able to buy low again. So I wanted to visually see this, and the way Bill was going to help me out here was, there's two ways we're going to look at it and see which one's best, but it's using a box chart in a Python environment where it has like here, like on the side, this is pretty much exactly what I was wanting, but it would be like Asia session, pre-London, London, New York, for example, and then this is like the low and the high of that particular session, and then obviously like where it closes. It'd actually be pretty interesting to see where the volume part was as well inside of here, like the congested part. But then if my theory is that I want to look at like on days, kind of like the currency strength, that say today's like, oh, we'll go back to like last week. So last week, what date was it? Whatever it was, we'll just say 28 June. On 20, no, it was earlier, wasn't it? So 25 of June. If I isolate that London candle, if I isolate that New York candle, for example, closed up near the highs of the day, and then have another day on the 26th, and then have the box chart as well, I'm pretty sure that London session would have a pullback.
Your
That's
wick,
not so
yeah.
much, and that would just be a bottom wick. But I wanted to do this for not just German 40, but I wanted to have something that I could compare, like just go through a whole bunch of things, because there's huge merit in just understanding how supply demand works with New York being so bullish. So, but I thought box chart would be an interesting way of displaying that data, but you might get more visual, you might get more data compactment if it is vertical, like a horizontal one, which would be just by changing these into specific, just changing London into a candle.
Yeah, yeah. Well, I mean, I'll have a little play with converting these into candles based on the timings that are in there at the moment. So each session is a candle.
Cool.
And then we'll see how that looks. The thing with obviously with TradingView is that you're limited in what you can do. So obviously you need to use other software if you want to make it horizontal, etc.
Yeah, I wanted to visually see if there is something,
Yeah.
and then we're gonna actually, if it's there, then it's easy to do in Python, but you can't. It's a lot more technical to like make it visual. So
Yeah.
But once we can make it visual, we can easily see if there's any statistical relevance to it. Because I think there's a huge edge. Because look at last week. So we had Monday last week. Monday New York session, clearly bullish, wasn't it? And they closed into the highs of the day, and this was on the ceasefire being put in.
Yeah.
Asia just pushed up. They rode their momentum, and it doesn't take if there's not much in Asia session, being that it's a lower volume session, if there's no real resistance above here, it actually doesn't take a lot of capital to push price up. If there's no resistance, it can just it might have taken New York with all this potential concern, could have cost them like billions and billions and billions to push price up this high. But then Asia session, if there's no real resistance, it could have just cost Asia, a few million just to push price up. If there's no sellers, then Euro comes in, and we know Euro Open for German 40 specifically would have decent volume, and they push price up. And now London opening up here with New York, Asia, and Euro all in profit, it's very hard for London to go long immediately. So we get a pullback. So it could be pullback longs, or it could be like if you just get a push up from the immediate open, it makes sense for just fade it, because there should be a pullback for London to get a better price. Then
it might be interesting to. So what you can also do on TradingView is if I do create candles for each session, you can highlight, or you can export data where, say, New York has closed in the top 15% of the New York range.
Yeah.
Whatever you say, 5%, 10%, 15%. And then you could pull out the stats of how many times when it did close in the top 15%, did Asia carry on, or did Asia pull back, or if Asia carried on and they finished in the top 15%, and so did German, how frequently did London pull back? So you could actually get stats on that as well.
Yeah, I'm probably.
But not on the chart. It would export it to CSV file that you can play about with.
Yeah.
I think the first thing is just to look visually and see.
I think the visual test is better. Yeah, just for But it's more like not really what Asia does or London, the Euro does. It's more that if New York closes in that top part of the candle, and London opens higher than that, how often does London?
Well, the other thing, of course, is you almost kind of want to see New York, Asia, and pre-London as a candle, and in London you probably want to see as several candles, because you want to see the London candle might not be reflective. For here, for example, and the one you're talking about, it does have a pullback in London, and then it goes up, but then it comes back down again. So if you only show London as one candle, if it had come down even further, it wouldn't show that width. so much, would it?
No,
It's so sorry.
but it was bearish.
Well,
though.
yeah, if London had closed lower,
Yeah, if it closed
then
lower, it would have been
it
bearish.
wouldn't be so much. It wouldn't be a wick showing for London. It would be a rejection showing for London's
Yeah,
candle.
and that's fine. The idea is just not to buy the high with everyone else buying the high.
Yeah, absolutely. I'll have a little play with it over the weekend, and I'll ping something across.
Yeah, thank you. But then this day here is a little bit different because New York's still closed near the highs of the session, but it's not the highs of the day. So
yeah,
but whatever happened here, London did indeed just have a pullback. But then we go to this day here, and New York was very bullish, closed near the highs of the session, plus the highs of the day, plus Asia carried on, plus pre-London carried on. So London was a very sluggish day, and that's really the edge is just to not buy, not jump into buys too early. That's the idea of it. Because if it's
it
like
still
that,
pulled back to Asia high though, didn't it? And then went up.
Yeah, it pulled back, but
in the first couple of candles.
Yeah, it did. The idea is like London. I mean, if there's a real bullish driver, London might not pull back. Like it might not pull back to a specific zone, but it could just have a pullback based on like it just took time to pull back before it got to like oversold, before that was a decent buy. Because you can see all of them, like London here. Oh, London's a bit. It kind of pushed up immediately. Wasn't really. But by the time I actually had the decent one, was close to London close. Anyway, idea here, and then the same thing here. That why I was looking for sells on Monday was New York closed at the highs of the session, at the highs of the day, and then London's opening higher than that close. So to me, it was very difficult to want to buy London even in an uptrend because we're at resistance already. That made it much easier for me to look for sells.
Yeah.
So I think there's a huge edge in it. So that's why I want to explore.
Yeah, I'll give it a go this weekend, and I'll ping something over. I think I've done something similar. I've made, I think in one of the gym sessions actually there was a 1 hour overlay option. Actually, go in gym sessions quickly. Go into settings.
There was a
daily overlay. So if you click that on, so that shows you the daily overlay. Now, if you turn off the candles at the top, it'll basically look something like that.
Yeah.
If you hide all your drawings and everything, then it'll obviously show a bit better.
Yeah.
Yeah. So it'll look something like that.
It's like that. It's just having custom times for the sessions.
Yeah. No, so I'll do the custom times. Obviously, you can. Well, we know what the custom times are anyway. So yeah, I'll do that. Awesome. Just a quick question for you. I missed the entry this morning on the 1 minute.
Yeah.
Because I was waiting for the 1 minute candle after the divergence. I was waiting for a 1 candle confirmation, but the candle that I was waiting for was a rejection from the upside.
Oh, you wanted to see a rejection.
So it was the one at 8:28. So I held off.
This one.
Because that was actually a rejection from the upside. I held off and thought, well, I won't use that. I'm not completely convinced on that. Let's see if I get a better one. And then obviously I'd missed it by then.
Yeah, I mean that one closed above. It would be
it was
be a chase.
Quite a big stop loss though.
Yeah, that's true.
To get to the top, it would have been a 2.5 or 3 to 1, as opposed to a 6 or 7. I'm trying to get my risk reward up.
3 to 1 is still pretty great. But
yeah, true. Yeah. No, it is.
I would have been a bit concerned about here potentially coming back down and doing a retest.
Yeah.
So then that risk reward is you could be scared off by a potential rejection being less than 1 to 1.
Yeah, I think it's taking these. It's how do I explain it? When I'm following you, a lot of these trades are a bit of a punt. Put your stop loss a bit further down and let's go for it, even if it's kind of on its way down at the time. Which is what I find really tough to do, as opposed to seeing a candle that I say, okay, well, that's showing me some, that there's a reversal. I'll give it a go now.
Yeah.
And this was exactly the case in point. I saw a rejection from the upside, but actually, I should have just gone for it anyway.
Yeah, I think it's that's actually a style. It's much more individual candle based at zones.
Yes, it is.
And mine's less individual candle, but more zones and narrative. I think that's the difference. Is I'm trusting the zone without reading the specific candle. But I think there's you get some fantastic entries by reading the candles, but then there's times you miss it like this. And then the opposite is I trust my zone, but there was no price action, and then it just, there was really no entry, and it sort of just knocks me out. There's pros and cons, isn't there? So
yeah, I think.
Interject. Can I contribute?
Yeah.
I just thought you might want to look at the 2-minute chart there, and it looks like a really good IB entry, Jim. But I didn't pick that as my entry. I just did zone based myself. But that's that one there.
Oh, there.
And then it retests. And that's when your fear's at its max. But that's the retest of that IB. And then it's gone.
Yeah. I've got to get better at being a trust in the zone and saying I'm going to take a punt without necessarily the price action.
I think that's why I went away from price action a bit, is because I would get the 2, the 3, the 4 minute, give me some conflicting ideas, and then because I'll be more conservative. If one of them doesn't look like, if the 3 and the 4 stand out, or if say the 2 and the 3 stand out nicely, but the 4 looks a bit suspicious, I'll often miss the trade because I've had one time frame that I was confused on. Whereas then, I kind of just know I'm going to get a few more losses, but then just trust my zone, I just don't have as much conflict entering the trade.
Yeah. I think I need to trust the divergence a bit more as well, and consider that. If it's in my zone, then divergence is my price action, really.
Yeah, I think that divergence is very strong. Like, it's not often that it. I mean, sometimes you get divergence after divergence after like 3 divergences in a row.
Yeah.
But, we can't win everything, can we? And that's the thing. I think that it's a strong enough signal that I know that there's the opportunity that it offers is a lot better than the cost of when I do take some losses.
Yeah. If you actually go back onto 1 minute. Right. So you see where it's got bullish divergence on the green down at the bottom in the stochastic.
Yeah.
If you replay and put the price at that candle, and then go forward one candle at a time, see where it actually starts showing the bullish divergent.
Yes.
Yeah, keep going and wait until the green thing down the bottom turns up. Go again. Right. So you see, it only showed a bullish signal down here after the price action had left a long left. So those things actually are a bit rubbish because they wait quite a long time before they'll actually give you the signal. So what I was looking at was potentially trying to make something that noticed the divergence, but just waited for one candle in the other direction that didn't break the low, like this one I was talking about, the 1228 candle.
Yeah.
Before then showing that there's divergence.
I think
because
it's is it only shows divergence when the stocky now leaves the 20?
I don't think so, because if you go back one candle, it still doesn't show it there, and it's left by then.
Which time frame is the divergence showing on, Adam?
It's a 1 minute.
Do you know what the code says?
So I'm looking at the blue.
But
it's on all time frame.
But that's a multi-stock, right?
Sorry. It's on the 14.
Yeah. So maybe if you decrease that, you'll get. But then you're going to get a ton of more signals.
To me,
I thought,
my eyes already see this. It's something to
yeah,
do that the stochastic's waiting, the divergence indicator's waiting for something.
but
I'm not sure what
if
it's
it
waiting
showed
for.
it one candle earlier, so if you go back one more candle,
Yeah,
what you've got on price action is you've certainly got a lower low. So you could draw a line on the lower low for the price action, and you've certainly got a higher low.
yeah,
All you need is that one additional candle in the right direction, because you want to get in after this candle that we're currently showing. You don't want to get in after the next one because it's too far up.
yeah.
So I'm wondering if I can put something together that gives you a signal as it does down the bottom, but it does it earlier based on a reversal candle.
Yeah, you know what I think it might be is it actually might be based on the candle closing above the swing point.
Yeah, I think it is something like that. But then with some of these with German 40, it can move really quickly. So if it waits until it's up above there, like you said,
You missed
you're
it.
slightly in a
Yeah.
dangerous place to take a buy.
So there's that's already closed as well. That can't be that.
Actually, no, you're right. Yeah, that's closed and it still hasn't shown it.
Yeah. So the difference here is that my eyes spot this,
Yeah,
but the code is not spotting it. But maybe on your code, it could be when we do have that higher low, maybe it could have like a dashed line
yeah,
saying that divergence is forming, but then when it goes to solid, its divergence is confirmed.
yeah.
Maybe it's something like that. But I get it. I get, you know, it's painted it too.
Yeah, well,
too
it looks
late.
great, doesn't it? You think, oh, I'm going to use this indicator, but it's well after the fact. All of them are well after the fact.
Yeah, yeah. But my eyes spot that beforehand.
Yeah, no, and I actually saw it this morning, and I just waited for a candle that I saw it as a rejection from the upside, so I didn't take it, and I shouldn't have. I should have just gone with it.
Yeah, I think it's some issue with the code. However, it's just, I mean, I didn't.
He's
It was
basically
already
putting
part of
conditions
it.
in to stop it. He doesn't want it to appear too frequently, so he's putting conditions in, and the only way you can do that is by waiting later.
Oh, is it this pivot look left too? There's waiting 2 candles.
Oh, okay.
Is it that? Let's see.
Just jump in real quick and say thanks for tonight, Hayden. I'm going to take off, mate. Have a good one. Good luck, guys.
Cheers, buddy.
See ya.
See ya. I'm going to take off soon as well. Yeah, so I think it's that, Jim.
Yeah,
So you
you're
might.
right. It's waiting for a pivot, isn't
I've
it?
just gone, yeah, I've gone 1, and it's brought it forward 1 candle.
What happens if you go 0?
I can't.
Can you get rid of the right one? Why would you? Oh, I see. Yeah, okay. It's
Yeah.
looking.
Can't.
That's
Okay.
still better.
Yeah, it's still better, isn't it?
Yeah, it's definitely better.
So then what about...
And actually,
Yeah, I mean-
it probably appears at the beginning of the current candle as opposed to the end of it.
Oh, you know what I think it is? I think it's actually... It's that pivot, I think it's a fractal. I think it's waiting for 1 candle to confirm that's a fractal high.
Yeah.
Because that's not a fractal high until this candle closes.
But this is what I guess you can't show on replay is if this bearish rejection notification down the bottom appears at the beginning of the current candle as opposed to waiting until the end. Because if it's appearing at the beginning of the candle, that's perfect.
Yeah.
But we can't.
So that's where
Well,
I
unless you
think...
go down to like 15 seconds.
Yeah, I think maybe then that's where the dash line can be. That it's
Yeah.
at the start of the candle, it's not confirmed, but we've got stocky. We've got 2 conditions. One condition we've got prices made higher highs, and we've got the stochastic is made lower highs. But I guess how you anchor it to knowing that is the swing point, because it could be all through here as well.
Yeah.
Yeah, I don't know. That's going to be a tricky coding business.
Oh, well, anyway. Yeah, sorry for that.
No. At least
All good.
At least we've actually sped it up now, so it's a good question. Yeah, we've got now the multi-stock. Just if you want to make it even 1 candle faster, by default,
Yeah.
it's 2. Just drop it down by 1.
Yeah, it's quite a clever little indicator. I do like it actually. Yeah.
Maybe if you put it on the 15-second shot or something.
Yeah, let's go 30 seconds to see what it did. Oh, it's over here. Oh,
Well, the way to tell if it actually shows it at the beginning of that candle is to put it on the 15-second, have two windows and do the replay on the 15-second and have the 1 minute on the other side. Because then it shows you the...
Oh, yeah. I know what you mean.
Yeah, you have to split it into two windows.
Yeah, I think when you get to these second charts, the amount
Oh,
of
it just doesn't apply.
the amount of fractals that appear start becoming maybe it kind of washes it out a bit.
But if you split this one into two, so that's, there you go, have 1 minute on the left hand side, have 15-second on the right hand side. And then while you're in the right hand window, click replay on with the arrow to the right of it, to the right of replay, and say, oh yeah, there you go. So if you put the multi-stop on the left hand side because you want to see the 1 minute, and then change that to pivot 1 as you did earlier. And then if you click on the right hand window and just go forward really slowly, you can see the left hand side forming as it does its business.
Yeah, it's doing that live.
So we can see when it comes up with this. Oh no, you haven't got the divergence thing showing on the multi-stop on the left hand side. Oh, there you go. Oh, okay, yeah. So if you, oh yeah, that's showing really early. Look on the left hand side. That's showing when it's while you're in a really good place to buy.
Yeah.
So it's not at the end of the current 1 minute candle. It's showing it earlier.
It's strange, isn't it?
Yeah, but it's good though because it's then showing this is showing when you're here.
Yeah.
Not when that closes.
Yeah.
Oh, vastly impressed with the indicator now.
Alrighty. Well,
Yeah, that's a really good question because that entry that you look at, Jim, if you look at it on Akshay Strat, you're taking the low of the hourly, but if you're waiting for 10-minute manipulation, you're in the same place as what the original signal was giving us on the divergence.
Yeah, Akshay's price action doesn't work for German as it does for gold during the New York session. No, I know. But as he said yesterday, you know, when you left yesterday, Hayden, the London session buy that we got was based on a 15-minute candle right here.
Oh, this one.
And what Akshay was saying, there's a rejection here. There's was it 15 or was it 10-minute?
Oh, it's this one, wasn't it? Is this candle?
Yeah. That was it. Yeah. So inside bar rejection.
Yeah.
Well, it's somewhere around here. I can't remember where it was.
It was that one.
But it was a nice. It was his price action worked perfectly, and then you just took the entry on the 1 minute.
Mm.
Yeah.
Yeah. There's pretty crappy rate. I just noticed like it's only 67 pips for this first hour and a half. Crappy. Low volume. All right, guys. Well, we didn't have got the follow through, so maybe it's just going to continue. But we had, I think it was excellent to wait for the sells, and the buys were very good. It's just been trapped inside this London range, but good sesh, guys. I'm well pleased. We got most of the work done in the first 30 minutes. So
yeah, 2 trades, 2 winners.
yeah, man. 1 break even, and then the winner for me, but. Better than 2 losses and then a win like yesterday. Cool. All right. Well, I'm going to go. So good luck for the rest of the session. Trade safe, okay? Create your plans. Trade your plan. I'll see you tomorrow morning. We'll unpack
Thank you. Bye, everyone.
Cheers, Hayden.
See you then. See you guys. Bye-bye.
Cheers, guys.
Okay.